Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Arthur Veytsman of Immerse. Arthur, thank you for joining us.
Hey, Hall, how are you? Thanks for having me.
Great. Thank you for joining. And so what was your background before investing in early stage companies?
I started my career with EY Consulting back in the days. And after 7 years of consulting, working with companies, my thesis have been always how to apply technology to an operation and to make it better, to make it more profitable. So ever since I left consulting, started investing in my own businesses. My thesis has always been to start a business that's technology-oriented and or it has some piece of technology that makes it better amongst the competition. And that's kind of been my forte. So I like to invest in companies I understand, I can relate to. And I also like to keep a very close circle of companies I invest in. Somehow one company should benefit the other. Kind of similar to what VCs are doing on a bigger scale. When they don't invest into everything, they'll invest into companies that will benefit from each other.
Very good advice. And so we have a lot of investors who listen to the show. They're always trying to figure out how to invest in startups. What's your advice for those who are just now starting their journey in funding startups? What would you tell them to look for?
I would say be careful about just great ideas because there are a dime a dozen of those. Many people can come up with good ideas. The company that will grab my attention is the company that has a prior success in the management team. Again, that success has to be proven in the same space. That's always a benefit. My experience is that even if the idea is mediocre, with the proper management team, they can make it happen. So be careful about just looking at idea. Look at the management team, and also make sure that it's not just a thesis. They have some clients, some customers who are using the platform, and you can interview the clients and make sure that the clients are satisfied with the product.
That's good advice. So, the state of investing in early stage tech deals continues to evolve. How do you see it shaping up these days? Where do you see it going?
I'll be speaking from personal experience. I've done 3 companies in tech, on my third one myself. So I'm an investor and I'm also an entrepreneur. So I sit on both sides of the table, which helps quite a bit with understanding how to invest into a smaller company, into startups. The tech is difficult just because a lot of people get into tech not fully understanding what the undertaking is going to be. Usually, entrepreneurs underestimate the effort quite a bit, both from time and financial effort. So I've seen where companies raising $500,000 and they think that they can get to a point, to a certain milestone with $500,000, where I'm looking at the same deck and I say it's going to take you $5 million, not $500,000. So got to be careful before you invest into tech. You have to understand the tech itself. I kind of follow Warren Buffett advice on investing in general. Don't invest in things I don't understand. Like healthcare, for example, I don't touch because I've never been part of that industry and I don't quite understand it. I don't understand all the obstacles they have to go through. So I try to invest into, even if it's in the tech sector, I try to invest in the companies that I can relate to in the specific verticals.
Great. So to dive more deeply into your investment thesis and how you came to it, what exactly are you looking for? It looks like you're looking for companies that have a good team and some revenue traction and their state that they can help your other portfolios. But what else can you tell us about the companies you look for that you want to invest in?
This time I focus on companies in the direct-to-consumer space. I think there's a huge macro trend that's happening right now where a traditional retail model is broken. People that manufacture their own product want to sell directly to consumer, and that's the space that I'm interested in. And the reason I'm deeply involved in the space is because my current venture, which is Immerss, is a technology platform that helps direct-to-consumer brands to reach the customers directly using live video. So because I'm involved in that space, personally invested in this company. I invested quite a bit of money to develop this technology. And to me, any brand that I invest in could become a customer to my platform. That's definitely a big plus. One example of that is Chemic. Boston-based company that manufactures outdoors goods. By the way, that was your lead, so thank you for that. Decided to invest in them because, again, first of all, the management team, and second of all, they were trying to go from traditional retail to direct-to-consumer, and this is something I can assist them with using the platform.
Well, that's great. Well, that's a good example as well. And so you see a lot of companies that are launching their tech business in the early phase, and you talk about the importance of execution and a good team. But in general, what do you see as the main challenges startups face in today's world? It seems like there's so much more supporting tools now with the web and AI and others to launch a business. But what do you see as the main challenge they have to overcome?
So being able to launch a business in Amazon cloud and being able to grab SaaS platforms that you need to get the business going, those things made it much easier to get into business. So there's a less of a barrier for companies to start a new startup. The opposite side of that, though, is that it's easier to jump in, but it's harder to sustain itself. So again, going back to experience, going back to sustainable business model, I don't believe in businesses that raise money and not knowing how they're going to become profitable. That's just my personal preference. I don't look at business models that are not trying to show how they get into black at all. So I focus on companies that are profitable businesses or can become profitable businesses very quickly.
That's very important. To be sustainable, you must be living off the customer's money, as the investor's money doesn't last forever. Eventually, you have to move to the customer's money. So that's a good point. You see a lot of sectors and applications out there. If you had to pick two or three that were really good opportunities in today's market, what would you pursue?
Besides the D2C space, which I really like, that's my focus right now. Any kind of technology, any kind of SaaS platform that can make, I focus on B2B specifically because I think B2C is too expensive and it requires a lot of money and a lot of expertise. So I focus on, from technology standpoint of view, I focus on B2B only. I like SaaS platforms, I like recurring revenues. So any kind of business that can prove themselves to be valuable to other businesses is definitely something I look at.
Well, that's great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
As far as advice to investors, my number one advice is make sure when you invest into a company, make sure you understand everything they do. It's not just a pretty picture. Make sure that the management team is solid and they have worked together before. That's very important. Don't invest in solopreneurs. That's very dangerous just because it's much higher opportunity to err or opportunity to fail. Just protect your money as much as possible. When you make an investment, make sure that it's a solid one. I don't like the odds of one survival out of 10. When you have a lot of money, you're okay with that. I don't like those odds. I look at investments that are going to bring me not 20% ROI a year. I look at investments that can give me a 2x, 3x in 3-4 years. So just be careful, be choosy, and that's probably it.
Well, that's great. Well, how best for listeners to get back in touch with you?
I'm on LinkedIn, very easy to find, very easy to strike conversation with. My LinkedIn profile, I'm sure, is going to be shared on this interview, so that's the best way to reach me.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Great. Thanks for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.